What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some stocks that we're watching for the week ahead. These stocks include names like Apple, Tesla, Meta, NVDA, and AMD. We're going to give you all the resistance and support points that you need for these stocks. That way you know exactly what critical levels to watch when you're trading them for yourself. So let's go ahead and get started by first talking about SPY, and we're going to do so on the weekly candles. And the reason why we're starting off with the weekly candles instead of the daily candles this time around is because something significant happened last week, and that was that SPY's weekly candle closed below the 100-day moving average. So the most significant moving averages you can have on your chart are the 100 and the 200-day moving averages. We've already talked about the fact that SPY closed below its 200-day moving average just a few weeks ago, and you can see that ever since that break, SPY has been selling off and deepening its downside move. And now that we're below even a more significant line, because the longer time frame means that this is a more significant time frame, now that we're below the 100-day moving average on the weekly chart, it could mean that going into November, SPY has more downside room to go. Now we're going to talk about those specific targets in just a little bit, but let's talk about some things that are happening this week and some things that happened last week that can influence our direction and where we could go next. So last week on our analysis, our SPY target was 410, and you can see that SPY ended the week at 410. For this time around, our SPY target to the downside is going to be below 409. So if you break below 409, or if we see SPY break below 409, we do have a further downside target. But like I said, before we get into that, let's talk about some things that are happening this week. First things first, the biggest event of this week is going to be Apple's earnings. We've already seen earnings from companies like Microsoft, which gapped up on earnings, but unfortunately it did not hold the gap up. So although the company beat earnings expectations, you can see that selling pressure from overall markets was too strong, and it filled the gap down very quickly despite the earnings beat. Google is another company that beat earnings, however, it sold off and also continued selling off throughout the week. And Meta is another one of those examples. In fact, the only company that gapped up on earnings and kept its gap up was Amazon, and even Amazon is still making lower highs. So all this means that there is too much selling pressure, and even great earnings aren't able to rescue the markets right now. So this is spelling a very bearish signal overall. Now, in terms of SPY levels going into this week, here are some critical levels that we're focused on. If Apple beats earnings, and there's one more event that we're going to talk about that's going to send us further up or down, but if Apple beats earnings and moves the entire market up, we are looking for a break above 424.80 for buyers to regain any kind of control on the market. Now, 424.80 comes from the significance of this rejection right here. There was a rejection on October 24th that really sent markets down. You can see that the moment this took place, markets sold off significantly. And so buyers will need to regain this level in order to regain any kind of confidence and move back above this point. Apart from this level, 424.80 will also put SPY back above its 200-day moving average. This 200-day moving average is a level that we have not broken below since we regained it back in March. When we did regain it back in March, you can see we rallied on for the weeks to follow. So SPY and buyers are looking for that regain above that 200-day moving average in order for them to take any kind of confidence. But if we can't regain that level very quickly, then sellers will likely remain in control and we will head further down. Now, if we do head further down, a move below 409 has a price target of around 403.80, and below 403.80, our second downside price target is going to be right around 399. We will be updating these levels in the coming videos, so make sure you subscribe and check back in to our videos so we can update you on all these targets. The next stock on our watch list is going to be Apple, which is reporting earnings this week, and like SPY and many other names on the market right now, Apple broke below its 200-day moving average last week. Now, we already saw the significance of this moving average because we saw that when SPY broke below it, it only took 2 more days of consolidation before it furthered its downside move. Apple is projected to do the same now that it is below that 200-day moving average. So if you are a buyer or if you are interested in Apple, the first thing you want to do every single day when the market opens up is go to the daily chart and see where Apple opens in relation to that 200-day moving average. If it opens above it, that 200-day moving average can be used as a support. If it opens below it, that 200-day moving average will remain a resistance, such as the 100-day moving average did so here. Now here are some levels to watch for Apple, but before we get into those levels, let's talk about their earnings expectations. Analysts are more bullish this quarter than last quarter on Apple. You can see that they have an estimated earnings per share of around 139, where last quarter was around 119, and Apple came in at 126. So they are a little bit more bullish, but not too aggressive, not as aggressive as they are in Q4, which is usually the more aggressive target. Now we know for a fact that no matter what tech has done, with the examples of Microsoft, with Meta, and Google, so far, none of it has been good enough to impress markets, and that's likely because of higher interest rates. Now, speaking of higher interest rates, this week we have the Federal Reserve meeting, which is set to take place starting Tuesday and Wednesday. This is the two-day FOMC event, and the Federal Reserve will decide whether to raise interest rates or keep them as is. Since early last year, the Federal Reserve has hiked rates 11 straight times. However, they decided to hold them steady during their last meeting, and markets expect them to do the same again this meeting. Fed members all agree that inflation is still far too high and are adamant to keep rates as is until inflation cools down to their 2% target. Higher interest rates make it more expensive to borrow capital, which in turn hurts company growth, research and development, hiring, and consumer spending. So higher interest rates make it more expensive to spend, which is why the Federal Reserve wants to keep them high. That way they can try to control inflation. So now moving on to Apple's short-term targets. If you are looking at Apple's downside, you would need a move below 165.30 in order for Apple to move to the downside target of 163.50, and the second downside price target would be right around 159 to 160. Now to the upside, Apple has a target above 161.65, 171.65 of around 174, but even then we would not feel too comfortable holding calls, especially as a swing, until Apple regains the 190 level. So yes, that is a far level. It is far away from now, but there is a very good chance that no matter what Apple does below 190, sellers will try to regain control and move it down very quickly, such as they did here. You can see that no matter how much buyers tried, sellers still took control and they brought it back within just a matter of a few days back towards that 165 level. The next stock on our watch list is going to be Tesla, which also reported earnings recently, and Tesla missed both top and bottom estimates, which explains why it had such a sharp downside move. And Tesla is currently forming what is known as a bearish flag, which basically says if it's a bear flag, there's a long downside move, and then there's consolidation on the bottom side of that move, which for Tesla is right above 200. Now notice that Tesla is also below that 200-day moving average, which we've already talked about the significance of. Here are some levels to watch for Tesla on the shorter term charts, and you can see that it's kind of an ugly chart. It's not really a very straightforward chart. There's a lot of resistance, there's a lot of support, and that's just because Tesla has been tightly moving ever since their earnings. So if you are looking at a downside move, you need a break below 202.40 and 199.30 in order for sellers to take more control. They're already in control, but for them to move it down sharper, they would need a break below 199.30, the first downside price target, which would be where we collect profits, which would be right around 191 to 192, and our second take profit target would be right around 178 to 180. We will be sending setups or official setups to our premium members. If you're interested in learning more, make sure you check out the link in the bio. Now, if you are bullish on Tesla, you need the stock to move at least above 231.65 in order for buyers to take control. Now, if you are interested in a scalp trade, yes, you can take calls or long the position above 214.80, but just keep in mind that buyers will remain weak until Tesla can move above that 231.65. At that point, your price target would be right around 247. The next stock on our watch list is going to be Meta, which also reported earnings last week, and Meta moved below its 100-day moving average. You can see that line has not been broken below ever since Meta moved back above it in January. So the significance of this line obviously means that if it's the 100-day moving average, what this line measures is the average price that buyers have been willing to pay for the last 100 days. And right now, since we're below that line on Meta, buyers are not willing to pay the average price of what would be $299.48 for this line. So now that it's below this line, if you are interested in Meta, the first thing you should do every day is opening up your daily chart and seeing where Meta opened up in relation to that line. As long as it's below it, that line will act as a resistance, as you could clearly see it did on Friday, where Meta got rejected right at that line before pulling back and moving lower. So Meta's shorter term targets are as follows. If you are looking at Meta's hourly chart here in this case, here are some levels for you to have on your chart. First of all, you have a support at 290. It's not a very significant support, but it is still a support. So if Meta may reverse, it may reverse at 290 and move back up. But if it fails at 290 and moves lower, the most critical support is going to be right around 279.40, which was the lowest part that they formed as they came down from their earnings. This was the earnings low before they reversed back up. And so if it breaks below that level, you know that buyers are no longer willing to defend that support, and sellers will take control, and the first downside price target is going to be right around 274. The second downside price target would be around 268. Again, we will be sending official setups to our premiums, to our premium members. If you are interested in checking that out, make sure you check the link in the bio. If not, you can just check back in. We will be updating levels on these charts throughout the week. Now to the bullish side, if you are bullish on Meta, we already spoke about this 100-day moving average that it needs to move back above. If it can successfully move back above it, it'll also need to break above 299.20 in order for it to see a price target of around 304 to 305. And above that level, the price target gets a little bit more aggressive, which is right around 318 to 319. Keep in mind, with any aggressive price targets, you want to give yourself time on your calls or your puts. And that's because it is very unlikely that Meta is going to make a $20 move in just a week. It's not impossible considering all the events that are happening this week, but regardless, you always want to give yourself time to be on the safer side. So I would suggest that you go at least 3 to 4 weeks out on calls or puts. The next stock on our watches is going to be NVDA, which has yet to report earnings. They will be reporting earnings in just a few weeks, and we will have an earnings update on them. But for now, NVIDIA, you can see, is trading below its 10, 20, 50, and 100-day moving averages. The only moving average left as a support is going to be that 200-day moving average. So if you are looking at NVIDIA's daily chart, you want to open up that daily chart and see where it is trading in relation to these lines. Currently, all these lines are acting as a resistance point, and you can clearly see that from this rejection here, where NVIDIA moved to that 10-day moving average and got rejected and got sent back down. And ever since then, it is still coming back down. So NVIDIA moved sideways on Thursday and Friday. And here are some levels to watch in order for NVIDIA to decide whether to go up or down from here. You have a support at 396.60. So you can see NVIDIA tried to move below that 400. Sellers tried to take that control. But usually when you're breaking a very strong psychological level, such as 100, 200, 300, or 400 in this case, there's always a battle before the actual break happens. So here in this case, NVIDIA battled that 400, managed to close above 400, but it is still very close to that level, which makes us think that NVIDIA is on the verge of breaking. So if NVIDIA does break below that 400 level, the support is at 396.60. Below that level, we have a downside price target, which we will take puts on with our members around 385, and below 385, the downside price target is going to be right around 373 to 374. Again, we will be updating these levels, so make sure you're checking back into our videos. To the top side, NVIDIA has a resistance right around 412.05, but a break above it is not enough to suggest getting into calls because it is still very weak. It will need to break above 422.60 in order for us to comfortably get into calls. But if we are swinging calls, and that goes for all the stocks that we've talked about and we're going to talk about today, if we are swinging calls in this environment, we are keeping a very small and modest position because it is very risky to bet against the trend, especially on a swing trade. Above 422.60, NVIDIA has an aggressive price target of around 438 to 440. Last but not least, AMD's earnings are set to report this week, which will definitely influence NVIDIA because they're both in the semiconductor sector, so make sure you're watching out for AMD if you are interested in NVIDIA. AMD, like many other major names on the market, is currently trading below its 200-day moving average and is far below all of its other moving averages. Again, you can see the significance of a moving average here on this rejection, where you can see AMD got rejected at the 100-day moving average. And ever since then, it has been selling off. Now it is below the 200-day moving average. So if you are a buyer, the first thing you need to do, once again, as we've already mentioned, open up that daily chart every single morning when the market opens and see where AMD opened in relation to that line. AMD's shorter term targets are as follows. AMD, first of all, will need to move at least above 112 for them to regain any kind of control. The significance of that 112 actually comes from the fact that AMD got rejected at that level 3 times, which is called a triple top pattern. If you are interested in learning more market patterns, we will leave a link in the description. That way you can see all the patterns that we follow and all the patterns you should know. The triple top pattern means that a stock got rejected at the same price level 3 times, in which you can see that AMD once here, twice here, and 3 times here got rejected at 112, which makes 112 the most significant resistance that it needs to regain control on the buying side. Currently, AMD is in a strong bearish territory, and it will remain as so as long as it's below 97.50 this week. Below 97.50, AMD can retest that 93 level, and below 93, the downside price target is going to be 89. One thing to remember for both AMD and Apple is that earnings will send them very strongly either up or down, but we don't know which direction they will go next. If you are looking at AMD or Apple calls this week or puts, you want to make sure you're paying attention to something called implied volatility. There's a good chance that implied volatility will move above 100% on both these names, and implied volatility measures how large of a move earnings are expecting. So right now, AMD earnings, or buyers and sellers, are expecting an $8 move on earnings. Say, for example, you buy one of these calls or puts, and AMD does not move as much as $8 either up or down. The implied volatility will be crushed and it will move back towards 30%, and so will AMD's premiums, crushing the option value with it. If you want to learn more about implied volatility, we will leave a video specific to implied volatility in the description. Apple, same thing. You can see right now, Apple's implied volatility is slightly higher than usual. Usually, Apple's implied volatility is around 30%. But considering the fact that we are going into an earnings week, markets expect a large move from Apple. And if that move doesn't follow as large as they expect, then Apple's implied volatility will be crushed, and so will the Apple option premium. So thank you guys so much for checking in. I hope you found this video helpful. Make sure you subscribe and like.